Hey guys, good afternoon, everybody. Today is Monday, March 28th. It is 2 o'clock for our scheduled mentoring session. I'm going to go and set this room up real quick, and then we will get started with our session for today. So let me just get everything all set up real quick. I will get this link sent out to you guys as well. And we can get started. So that's good. That's good. A couple more things here. Go. All right. That's good. All right, cool. Let me send this link out to you guys real quick, and then we will get started with our group mentoring session for the day. All right, solid. So I'll give it a few minutes for people to make their way in, and then we will get started. All right, guys, good afternoon, everybody. It is 2:02 right now. I'll give it a few minutes for people to make their way into the room. There's only about 3 people in right now, so I think people are slowly making their way in. So I'll give it some time for people to join in, and then we'll get started with our session for this afternoon. Market pretty much died out towards the end, as you guys can see right here. Literally no movement in about the last hour of the market right here. So we'll see if this picks up a little later, but you can see there's a lot of dead periods right here where price is just ranging super heavy. Pushed up a little bit, ranging consolidated. And they just did the same thing, same pattern pretty much. One thing that some people were mentioning was that the mid-market reversal played out like almost perfectly. If you guys are following the mid-market reversal over here, you know, the mid-market reversal tends to happen between 9 or 10, sometimes after that. But if you guys were following it, you guys can see that there was a ton of liquidity on the top set right here. So I'll just draw this up to show you guys where that liquidity was sitting for a lot of you guys who did catch this mid-market reversal. I didn't catch it, obviously. I don't trade anymore after the live session. I just sit out the market. But for a lot of guys who do trade the mid-market reversal, you guys can see right here that there was a ton of liquidity sitting here from way before the live session, right? Price was pushing down up until 8. This is when we got off the live session around 8. Price continued to drop. But if you guys marked up all the liquidity, you guys would have seen that price would have shot up pretty heavy once it hit, you know, these areas of liquidity right here. So having these all marked up and letting it run, you can see between this period right here from 9 o'clock until market close, it pretty much just went straight up. So from 9 up until noon over here, pretty much straight up reversal. So you can see price right here pushing up, As soon as it got up to the first area of liquidity right there, pushed up higher. And then when it hit liquidity again right here, consolidated a bit before pushing up to a higher point right there, pretty much knocking out all the liquidity from earlier this morning. As you can see right there, some more liquidity and push all the way up to another area of liquidity right here. This is why it's important that you guys draw your liquidity, because you can see all of the liquidity here got hit from this morning. Pretty much all the liquidity that we marked up prior to the live session this morning. I think it pushed up. There's still actually more over there. It hasn't pushed all the way to the highest, but this is about market close. So as you can see, a lot of liquidity here got hit. Other than that, I think that's the only thing that we really discussed earlier. So good afternoon, people. I think there's a decent amount of people in here. So if you guys have any questions, feel free to put your questions in the chat. Just a reminder, this is the K2 group mentoring session that we have weekly. Basically, I come on this live, I answer whatever questions you guys have. It's basically just a Q&A between me and you guys, answering whatever questions you guys have, and clearing up any sort of confusion that you guys have with any of the K2 strategies, trade psychology, risk management, planning companies. I mean, literally whatever questions you guys have, I'm here to help you guys out. So I'll give it a few more minutes. It's 2:06 right now. We're supposed to start at 2, so we still have a lot of time. But if you guys have any questions, feel free to put your questions in the chat, and then I can get started with answering whatever questions you guys have. Otherwise, we'll just be sitting around and waiting. I don't have anything covered, like anything planned for today, really. These sessions will go on for as long as I have questions. So I'll give it a few more minutes. Just give me 1 second. I'm gonna step away for a few seconds. If you guys have any questions, put them in the chat, and then I will start looking over your questions as we continue pushing along. So I'll leave it at that, and I'll be right back in about a few seconds, guys. All right, guys, I'm back. Let's see. Looks like we got a couple questions here. So let's see. Let me start with Alicia's question. So mark this up real quick. So Alicia's first question is, sorry, I didn't catch my breath for a second. I had to run up the stairs. I'm not used to living in a 2-story building anymore. But all right, first question from Leash. Leash It asks newbie trader view question, trading view question, how to get sessions labeled on the side of the pivots. Mine shows numbers. So in order to get this right here, this label, just right click on your chart, go to settings, go to appearance, or sorry, wait, not appearance, scales. And then once you go to scales right here, you'll click on indicators and financials name labels. So if I turn this off, you can see they disappear. You just have numbers there, right? If you want to add the names, just click on that. Leash, it looks like you just rejoined the room. So Leash, I just want to make sure that you're in here before I answer your question. All right, so let's see. Hey, Leash, I just saw that you rejoined the room. I was going over your first question. I'll go over it again right now. So Leash's question is newbie trading view question, how to get the sessions labeled on the side for the pivots. Mine shows numbers. So in order to get the labels right here, you just need to right click on your chart, go to settings, go to scales right here. And you'll see this right here that says indicators and financial name labels. This is how yours looks because you said you just have numbers. In order to get the names on there, just click on that to turn it on. Click OK, and then it'll look like this. That's how you'll get the labels on there. For your second question, you're asking drawing liquidity. I tried practicing drawing lines of liquidity and somehow still messed that up, LOL. Can you go over what you're looking for when you draw them every morning? Let me see if there's anything right here. So I'm going to go over that question first because you have another question here. It's totally different. So I'll go over that part first. So drawing liquidity. I mean, it's really simple. All you do is you draw horizontal lines, or I use horizontal rays, so they're not crossing the entire screen. I just use horizontal rays, and all I do is I draw them where the high lows are. So let me go back to this morning because this is usually how I do it every morning. I'll go back to 6:30 a.m., which is right here. So here is the this is where the market was this morning. In order to draw your liquidity, you just need to turn on your horizontal ray tool right there. I use a magnet tool, so it clicks directly on the high lows. And what I do is I just go to all the lows here and I'll draw my liquidity, right? So we have one right there. These right here are broken, so you're not going to draw anything here. You need to draw stuff that hasn't been tested yet. So if this hasn't been tested, these all have been tested, so they're useless at this point. The next one is going to be right here because this one hasn't been tested. The next one's going to be right here. One after that's going to be right here. And the one after that's going to be right down here. So you're only drawing liquidity where it hasn't been tested yet. If it's been tested already, it's already been invalidated. So it's no longer liquidity. But these areas right here are going to be the liquidity for you. So basically I'll draw the liquidity where the lows have not been tested. And then same for the highs. Again, right here, there's a high that hasn't been tested, a high that hasn't been tested there, another high right there, another one right there, another one right there, and the last one right there. That's about it. Everything else has been tested. So if you look over here to these other highs, these have all been tested because they've already been broken. So these are no longer areas of liquidity. The areas of liquidity are these areas here that have not been tested yet, and then same with these lows over here. So we got these lows, these highs, and that's pretty much your liquidity. So that's it for that one right there. Your next question here is asking, is there a way to connect FTMO to TradingView? No. So definitely no way to connect them to. I mean, there's probably a way that you can do using a third-party software, but it's not one that I'd recommend because you want things to be aligned or native. So short answer to your question is no, you can't connect FTMO to TradingView because they're two different platforms. FTMO uses MT4 or CTrader. TradingView uses its own platform. So you can't use two different platforms on one account. So hopefully that makes sense, but they're like two different trading platforms. Like, you know, they're competitors, so they're not going to let you link both because they want you to use one or the other. So that's it for that question. Let me see your next question here. Your next question is, I'm going to try to read this. It's kind of confusing. Let me see. Practicing on demo and only showing brokers that are able to link. None of the brokers are going to be able to link to TradingView, Leach, because the problem is just like I mentioned before. If you look at the brokers here, So if you look at the brokers right here, none of these are MT4 brokers because they're all their own broker. So if you're using any of these, you're not going to see it. The only one you'll probably see will be Oanda, but you still can't use it because they're going to be two different accounts. You'll have an account for TradingView or you'll have an account for MT4. They're not going to cross over because they're different companies. It's like you trying to buy Nike at an Adidas store, right? They're not going to sell you some Nike stuff at Adidas. Vice versa, they're not going to sell you some Adidas stuff at Nike, right? Because they're two different companies. So, I mean, hopefully that makes sense. I feel like a lot of people don't get that these are two different platforms. And they're not going to, it's impossible for them to overlap unless FTMO ends up supporting one of these brokers here, which they probably will eventually because everyone uses TradingView. But currently right now, there's no way to link them because they're completely different opposite platforms. So, yeah, I know you're fine, Leash. I know you copy pasted it. I'll try to go down it one by one. If I miss any of your other questions, just let me know, and then I will go back and review it. But I'll try to read yours in order so that I don't miss any questions. So hopefully that makes sense for all the questions that I've answered so far. Your next question right here is going to be, let's see, confused on which strategy to use at any given time. So I think you're confusing yourself because I don't teach any of those strategies. You mentioned supply and demand, snipe strategy. I don't teach supply and demand. There's a snipe strategy, but everything kind of lines up with each other. So I think you need to, if you're going to use K2 strategies, remember to just stick to K2 strategies. You can always mesh different strategies if you like, but you're just going to confuse yourself, right? If you're confused just doing the basics, you're going to be even more confused trying to mix supply and demand with any of the K2 strategies because the K2 strategies are straight up, they're pretty much straight up. They're all rule based. So it's really hard to mess them up unless you mess them up yourself. And that's what happens with a lot of other people in K2 is that you guys come from different people who've taught you and you're confused about what they taught you. You come back to K2 and K2 is so straightforward that you start to mix things that you do or sorry, the next time talking right now. Let me mute these guys. All right, so we're good with that. But yeah, going back to because you're asking like you're confused on which strategy to use at any given time. The strategy that you use is the strategy that gives you an entry, right? So I think your main confusion is that you don't know the strategies. If you knew the strategies, you would know which one to apply at any given time because the strategies line up with whatever entry that you see on the chart. So you can't really confuse a snipe with the variation because they're not, either they're going to come up at the same time or they're not. So I think what you got to do is you got to actually go back and understand the strategy and know what you're applying because you shouldn't really be confused about what to apply. If the entry is there applying the strategies, then you would take it, right? So if I put the strategies over here, and I'm going to show you how it's really hard for you to really mess it up because the breakout happens the first couple minutes of the open, and then you're talking about the snipe over here. This is not going to come up on the first couple minutes of open. So it's like impossible for you to get these mixed up because the requirements here are totally different. So I think your problem is that you need to actually go and understand what strategy has which requirements, and you might be trying to learn too much at once. So what I would recommend is just focus on one or two strategies, actually get that down, and then move on to the next one. Or don't even move on to the next one. Just find which one works best for you and apply that one by itself. This is an issue that I see with a lot of new traders who come to K2. They see that all the strategies work very well. So they try to learn everything at once and they end up failing at everything. So I think your confusion is more of like, it's an individual issue. So what I'd recommend is go back and find a strategy that you like and just focus on that. If you like snipe strategies, use that. But you did mention supply and demand. I don't teach supply and demand, so that's not going to be one that you should be confused with. Other than that, let me see if there's anything else here that I'm missing. Let's see. Let me just see what Solange mentioned here. Solange said, would say don't depend on the snipe until you're confident with it. It's better to use as a confluence for other entries. Yeah, no, exactly. So like just like what Solange said, there's a lot of strategies to use, but you don't have to know all of them. Like you're better off just mastering one of them or two of them, and then and then getting better at that. And then from there, you could use other strategies as extra confluences, but you don't necessarily have to take every single trade, right? Because if you take every single trade, you're probably gonna make a lot of mistakes because you're probably not confident in taking any one specifically. So moving on to the next question. Let's see here. So your next question is going over the course video, and it seems like they're all using the indicators at various points. Yeah, well, they're all using it. I mean, there's no specific various points. I mean, it just depends on what applies, right? So like, for example, if you're using the breakout, you're looking for the breakout. If these requirements fit, then you're going to apply the strategy. If you're applying, there's no specific time to use them, aside from like the breakout and the daily. If you're applying the variation 1, variation 2, you can see that the strategies vary. So for these, you're looking for a double wick rejection for the version 1. For version 2, you're not looking for a double wick rejection. You're looking for a following candle that is opposite. And then for the third one, version 3, you're looking for the same thing, but not a strong candle. So the main differences here, and I'll try to draw a line here. So like the main differences here are going to be requirement number 2. Let me see if I can hit arrow here. Requirement number 2 for the version 1. Requirement number 3 for the version 2. And requirement number 3 for version 3. So as you can see, there's small differences here, but they're not going to align with each other. It just depends on what you have there. So I think what you need to do, Leash, is you need to go back and actually like understand the strategies, because if you did understand them, you wouldn't be confused, because the problem with these are that, or the problem with that you're having is that you don't understand the difference between the strategies. Sometimes you do come up where it's the same entry with 2 different strategies. I'll give you confluence for a better entry because all these strategies are standalone. So if you have 2 strategies that line up with 1 entry, that entry is probably going to hit because there's so many confluences pushing in that direction. So my advice to you is probably go back and practice more. I feel like you haven't practiced enough to really understand the differences, but yeah, sometimes these will line up. That's why there's strategies right here, like a triple confluence, right? So the triple confluence, this is basically 3 different strategies that line up together. For this, you're basically using the high-low strategy, the intraday strategy, and the pivot scalp strategy. So there's so many different opportunities for you to take with these entries here. I think what you need to do though is just you need to focus on like 1 or 2 strategies and master that so that you can know when to take it. And it's going to take time, right? You're not going to be a master at this overnight, like especially if you come from a different trading background where you're not familiar with the type of way that we trade here, because we just scalp. And our strategies are very straightforward. There's no subjectivity here. The only strategy that probably has the most subjectivity would be the breakout, because you're looking for this requirement here, the third one, a strong candle, right? Strong candle is very subjective. For some people, it's going to be no wick on top. For some people, it's going to be a small wick on top. For some people, it'll be maybe even a medium wick on top if the body's really big. So the subjectivity of the strategies here are very straightforward. The only difference here would probably be the breakout, which might be a little confusing, but the more and more you apply it, the more and more it'll make sense. And if this is something that you have a problem with, I'd probably recommend just looking at all the previous live sessions, because I've gone over this pretty much every morning, specifically for Steven. So if you go back to any live session, you'll see the difference between a strong candle and a not so strong candle. So other than that, let me see if there's anything else here that I'm missing. Go down your questions over here. Can you go over the daily strategy rules in detail? I understand the, are you talking about the 10-minute? I'm trying to figure out which one you're referring to. Let me go down the question a little further if you have any more details there. So you're saying, can you go over the daily strategy rules in detail? I understand the high level overview, but it's bits and pieces I'm missing. Like how many candles do you have to be to take a trade? I forget what you said during the live session. Something about 3 candles away. So I think you're confusing a lot of things here, at least. The daily strategy doesn't require any of that stuff. So I don't know if you're referring to the actual daily strategy, the 10-minute daily entry, because this doesn't require any of that stuff that you referred to. And this goes back to me my reference that you probably don't understand the strategies properly. If you're referring to the daily strategy, you're just looking for the first momentum signal. So let me go to the 10-minute. That's where that strategy is being applied, which would have been right here. So let me just take everything off the chart here. And this might not be what you're referring to. You might have the whole thing confused and you might be thinking of something else, a different strategy, but you did mention the daily strategy. So if you're referring to the daily strategy, this is the daily strategy here. All right, so let me go back over here. Daily strategy, right? So this is the daily. If you're referring to the daily strategy, this is like the only daily strategy, unless it's applied on a different time frame. This is applied on the 10-minute. It's also applied on the 3-minute, but the 3-minute is not official. That's just one that some of our members do use. I don't personally use it because I don't think it's very accurate, but it does hit. So just FYI, it's mainly used on the 10-minute. So with this strategy right here, you're looking for an entry after New York Stock Exchange open, which is 6:30 a.m. This is the blue line, 6:30. This is when the market opened. And you're looking for the first valid K2 momentum signal. I know this thing came really late, so this wouldn't have counted as one that I would have taken, but some people still apply it. This requirement here is a new requirement. This wasn't here before. We just added a cutoff because we started to realize that when the trade came late, it ended up becoming not a good entry because it's just too late in the session. Because you definitely want to get out of this trade before market close for the day. So if you're using the original strategy, you technically don't need to follow this 5th one, but if you want to have a higher quality trade, I would recommend to just skip entries after this. I don't even trade after 8, so this is why this requirement wouldn't even apply to me personally. But if we were just to ignore this one, just to go back to our original daily strategy, this is what it would look like. You're looking for the first valid K2 momentum signal after open, which is 6:30 right here. There's no signals in between. This is the first valid signal. When you get that there, you enter this. It's really simple. It's like no brainer. You just look for the first valid signal. You enter a buy there. You go for 1,500 pips. And that's literally it. There's no guesswork here. There's no subjectivity. It's just you see the entry and you take it. So with that right there, you would take the trade and there you go, full TP. So this isn't a good example because this happened after 9 o'clock. Let me see if I can find one where it came during the session. So right here, here's another one right here. Or no, actually, no, this is past it. Or I guess this came like right at 9. So this would technically fall under the requirements here. So again, right here, I think this was on Friday. Let me check the calendar for the month. Watch this. This is actually Wednesday. Okay, so on Wednesday right here, you can see that the market opened at 6:30, which was right there. You're looking for the first valid K2 momentum signal. Right here is an invalid signal, so it's invalidated. It's not the entry. Right here is a valid signal. This happened like right at the cutoff. So if it's happened at 9, you could have still taken it. But I mean, it just depends on how risky you want to be. If you would have taken the trade right there, you enter a sell. You go for 1,500 pips. And this would have been pushed right there, full TP. So there's another example. Let me see if I can find one more that's like before the cutoff, or like, let's see if there's one here. So there's one right here. I can't remember if this happened during, or how much, back it up real quick. All right, so this was the day before on the 22nd. This was on Tuesday last week. Same thing again. You're looking for the first valid entry after market open. Market open right here at 6:30. You're looking for the first valid K2 momentum signal. It's right there. You'd enter, have your TP stop loss set at 150 pips or 1,500 pips. You let that run. And for the most part, this trade's supposed to end like before the end of the session. Sometimes you'll be holding on to it for a little longer. So as it got closer to here, I probably would have pulled out if I was in the position. But if I just kept holding on to it, you can see that eventually, because it was just ranging this whole time, eventually does make its way back down as it continues to drop. and then eventually does end up hitting TP right there. So this one took a lot longer than the others, but for the most part, we try to get in and out of this before the end of the session because it's a daily strategy. So we try to get in and out, within that time period. Other than that, let me go back to your other questions here, Leash. I haven't seen any input from you, so I'm not sure if there's, I was trying to go over if you were asking for something else because you were asking for the daily strategy. This is a daily strategy, but the question that you lined up with that question or the follow-up questions, none of them really applied to it. Because let me read your question again. You said, I understand the high-level overview, but the bits and pieces I'm missing is like how many candles away. So that's where I'm confused because you don't look for any candles away from the entry. You're just looking for a time period. So if there's any follow-up that you want to give me for that question, or if you want to clear up any of your confusion, I can go more in detail, but you don't draw liquidity for the daily strategy. There's no liquidity that's necessary for this one. You're just trading strictly off momentum. So I'll give it some time to see if you have any other input, but I mean, for the most part, I don't know what else to go over with that question there. But let me just skip over it. I'm going to keep going down. So your next question here is when to remove lines of liquidity, when a successful trade would look like. I think Alicia's talking about the high low as well. So maybe I could cover that too, but I guess I'll just cover it because it sounds like you're talking about the high low, but I don't want you to be confused and then mix the high low with the daily. I want to make sure that you understand the difference between the two because they're two totally different strategies. The high low is applied on the 1 minute and the daily is applied on the 10 minutes. So those are like, there should be no confusion between those two because they're totally different strategies with totally different requirements. So I'll put the requirement here for the daily. So this is the daily on the 10 minute. And then here are the requirements for the high low, which is, I do see where the confusion might be because you're talking about how many candles. If you're applying the high low, then yeah, this would be it. Let me see if there's anything else here. All right, let me just scroll up. I'll see if I can try to go over the details of your question here. So you're asking what a successful trade would look like. I mean, short answer to that is a trade that wins, right? That's how you would. And I think your choice of words are like a little confusing here too, because I think quality versus successful. I think the word you're looking for is quality trade, not necessarily successful, because a successful trade would be one that wins. One that's quality is one that fits the requirements. So both of your questions here, let's see. I'm going to go down your questions here. When to remove liquidity, what a successful trade would look like. Are there instances where all criteria is met and you still wouldn't take the trade? Today's live was good. Finally understood what the retest looked like. Took some time for me. Yeah, which is fine. It's a confusion for a lot of others. Leaf said Wi-Fi is being shitty, but yes, everything's making sense. I think I'm mixing up the strategies. No, which is perfect, Leash. And I'm glad that you asked these questions here because it's better for you to clear it up than to continue being confused, right? Because a lot of people are scared to ask questions, right? Which is okay. Some people are just shy and they don't want to ask questions, but you'll never learn that way. So I'm glad that you're asking these questions so that we can clear it up for you right now, rather than clearing it up for you like months later, where you're completely confused. So I think the strategy that you're referring to is a high-low. So let me go over here and I'll just go over an example because there's one that's right here, and it's let's see. So I will put this right here. Okay, so here is an example of the high-low. We don't have the requirement here. We have a pending momentum signal. I'm not sure if that's one that we're going to add to it. We might not. I mean, who knows? We'll probably leave it out of it because the thing is, if you're applying the triple confluence, that's where it's required. For this one, it's not necessarily required. So let's just go over the strategy right here. The first requirement is to confirm the previous swing high and swing low. So I think this is a question you were confused with, right? How many candles until it establishes? So in order for these high lows to be established, there needs to be about 5 candles, maybe 6 in some instances, but for the most part, 5 minimum for it to establish as a high low. The reason why we have that is because this indicator repaints until it's been established. So for example, here it's been established, so it doesn't repaint, right? Let me show you an example over here where maybe it will be repainting. I just want to see where it's like kind of choppy. So it looks like it was a bit choppy, like, let me just go over here. I'll just show you, because the thing with this indicator is that it won't establish, okay, this is actually an example right here. So you can see that there's a high low right here, right? The reason why you need the 5 candles is because, check this out, if the candle pushes below it on the next one, it disappears, right? And that's why you want to wait 5 candles, because once 5 candles have passed, it won't keep repainting. So like, for example, right there, the low's been established again, or not established, but it's pending. We have another candle come below. It touched it right there, but you can see it's only 1 candle. Next candle pushed above, this one disappeared, and now it's over here, right? So this is why you want to wait for the 5 candles, because if you don't wait for the 5 candles, you might be entering too early, or you might be entering where the low hasn't even been established yet. So in order for it to establish, you need 5 candles to pass. Like for example, right here, there's a high that's established. 1, 2, 3, 4, 5. There's 5 candles that have touched it right there. And then you can see now that when price does push above it, this high here doesn't disappear, right? Because it's already been established at that point. So this is why you want to wait for 5 candles to pass before you establish it as an actual high low. Because if you keep following it, you can see that when price gets retested, it's just going to disappear. So that's the main reason why you want to establish the high low for this specific strategy. Let me go back over here real quick, and then I will mark up. I'm trying to figure out where that entry was. The entry was right here, I believe. Okay, so going back to the strategy right here, let me go down to the requirements. Again, right here, you want to confirm the previous swing high and swing low, making sure that 5 candles have passed. So this high right here, there's 1, 2, 3, 4, 5 candles have passed. This is established as a high. You know that this is not going to repaint. Same with this one right here, 1, 2, 3, 4, one more candle passing it, and this would be established as a low. So in order to take this trade right here, you want to confirm the swing high and the swing low. Second, you want to confirm that price breaks and closes past the previous swing. So this next candle right here, it breaks and closes past this high right here, right? So with that said, you have requirements 1 and 2 met. The third requirement, you want to confirm that you're trading in the direction of momentum. So that means that you want to trade where momentum is going. Looking back, the most recent momentum signal is a buy signal. So you know that momentum is pushing to the upside, right? That's going to be requirement 3. Requirement 4, you want to confirm that price is not ranging or consolidating. You can see that price was ranging right here. However, when price finally broke and closed above it, it's no longer in the range, right? Because it's outside. So with that said, we have requirements 1, 2, 3, and 4 met. Lastly, you want to confirm that price has not touched the previous swing before the break and close. So looking back over here, this candle never touched it. This candle never touched it. None of these candles touched it. So that requirement's met too. After that, you would enter this trade here for a long position. And this goes back to the question that you asked too, like identifying, what's a quality trade and what's a risky trade. For me specifically right here, I personally wouldn't take this trade because I'd never trade around where these sessions are, right? The sessions are too close. The problem with you trading around the sessions is that price can easily just reject right off it, bounce down. The good thing about this is that the TP is right before it, but still, this would still be a risky trade. So for me personally, I probably wouldn't have taken this trade because when price gets near this area, this is where spread starts to get wide because there's a lot of room for manipulation here. So for me personally, this is one that I would skip, but if you let it run here, you can see that it does hit TP. So hopefully that makes sense. A couple of the red flags here that I look out for, as I always mention. So let me just put this here, where I avoid entries. Price near sessions, price near news price, price near open price. So that's pretty much it. I mean, those are the main things that I look out for. So whenever price is near the sessions, I don't take trades around that point. Whenever price is near opening price, I don't take trades around that point, and then near news price. The main reason for that is because when you see price get near these areas, I mean, this isn't like, perfect example, but if you find another area here, like if I show you one, like right here. So when price was ranging within the sessions over here, you can see it becomes it becomes an issue, right? Because the thing is, if you're trading within this area and you enter a buy or a sell or whatever you're trying to enter, you can get caught in this range, which you don't want to be caught in. So whenever you see price get near these areas, so another example is right here. Like if you were to catch a buy here, right? Not that there was a buy here, but if there was some sort of buy entry right here, last thing you want to do is enter a buy at this point, and then you get screwed because price ends up going complete opposite, right? So that's why I don't trade around sessions. I don't trade around news price, and I don't trade around open price. Those are the main areas that I would avoid. So like I was discussing over here, even though this was a valid entry, all the requirements were met, and it did hit TP, I still would not have taken this trade personally because it was too close to the sessions. So hopefully that makes sense, Leash. I want to make sure that this is where I draw the line, right? If price is ever near these areas, I never take any trades. I just let them run. Like even though I would have missed this trade, I'm like, all right, cool, it's fine. I'll take the next one. Because the thing that a lot of people need to understand is that there's going to be more entries, right? You don't have to force every single entry. Your main goal should be to focus on quality entries and not losing. I think that's the main thing. The problem with a lot of people that I've seen, because we have a lot of people who join K2 and they've learned trading from other people, what they're taught is that it's okay to lose, which is fine. You know, it really is okay to lose. But if you keep being okay with that, right? Like, because I feel like with a lot of people, they think, oh, I can lose like X amount of times, but then I'll come back. I see a lot of people keep losing and they never come back. So the thing is, you should just focus on not losing, because if that's your problem where you go into drawdown forever and you never make it out of that hole, you're never going to get any better, right? So I teach things, like you guys have probably seen that I teach things a lot differently from like other people. You'll see a lot of people who have like low win rate, but they go for these big home run hits. Like they try to go for these huge moves. For me, I'm going for like smaller moves and medium moves, but I don't lose very much. So the profits just add up over time. So I mean, it's just up to preference how you guys want to trade. But I've been trading for a long time and this has been very consistent for me. So if you guys want to be consistent and you guys don't like losing trades, this is the way to trade. It's not the only way to trade, but this is the way that I like to trade and the way that a lot of other people like to trade as well. So hopefully that makes sense. You know, I just have a different trading style. There's no right or wrong way to trade. It just depends if that strategy or that type of trading style works for you. So other than that, let me see if there's any other questions here from Leash. Leash's other question here was, so you said, are there instances? So I already went over that. Today's live was good. Finally understood what a failed retest looks like. Yeah, no, exactly. So hopefully that answered, I guess, all of your questions, Leash. I'm not sure if I missed anything. If there's anything that I missed there, just add it again to the chat and then I'll go over it again for you. Or even if I went over it and you're still confused, just put your question in the chat and then I'll go over it in detail again so that it can help you actually understand the difference between it. So that's it with that question right there. We have a next question from, so next question is from Victor. So Victor's asking, so it is pretty much safe to say the smart move would be to only buy when the trend meter is green and vice versa for red. If fundamentals are 100% plus, then trend meter should be, so not necessarily, Victor. So back to Victor's question. Victor's basically asking, is it like safe to say that the smart move would be to take trades when the trend meter is green or blue? That's not always going to be the best option, because if you're trading on the 1 minute, this is a short-term trend, right? The fundamentals are going to be higher. It's going to be long-term because it doesn't change as often. Like if you're looking at the fundamentals here, this isn't going to shift between, oops, this isn't going to shift between like 150 points to like negative 150 points within a few seconds, right? Or a few minutes. You can see over here that this shifts pretty quickly. Like it'll shift from red to green. Let me see. From red to green, or from red to blue to green within 15 minutes. You're not going to see that change with the fundamentals. So I wouldn't necessarily say that. You know, going back to my list over here, technical is always going to be the last, Victor. So my let me see, my order of confluence is going to be retail sentiment, fundamentals, fundamental sentiment, or fundamental bias, and 3 technical bias. So in the instance like today, like for today, there was no retail sentiment, right? So we're looking at fundamentals and technicals. The fundamentals are always going to trump technical bias. So as you mentioned, if it's below or above 100 fundamentals, it's not going to make a difference. So like, for example, here, the fundamentals were red when you got off the live, right? So they were super red. They were down like 200 points. It turned green right here, but the fundamentals were still red. So if you took, like, for example, if you took the sell here, you wouldn't take the sell here because it's right at the session's right next to it. But for example, if you were just using that that type of analysis where you're just looking at the fundamentals, you're like, okay, this is 100. I know it's not 100 points in the red, but if it was, you're like, okay, this is down 100 points, and then also the trend meter is red, and you got a sell entry right there. This would not be the smartest move, right? And the reason for that is because it doesn't line up with everything else. Like for example, here, the bias here isn't bearish at all. Because if you look at the range right here, the technical, the trend meter doesn't literally tell you it's price is going to come down, right? There's a price is ranging right here. So I think the difference is, I'm not sure if you've been following like the live sessions where we've been looking for the bias, but when price is ranging like this, you don't want to enter any trades. You want to enter trades when price breaks above or below and confirms it. Like for example, here, price will break above, confirm it. That's where you would take a buy. And then vice versa down below here, price breaks below, retest, and confirm. That's where I would take the sell. That would be the smart move. This is where you can't like depend 100% on indicators, right? Because they're not going to tell you the overall trend. Price has been dropping for so long. There's a lot of different factors that go into this. Like for example, price has been dropping for so long. Price can't keep dropping forever, right? Especially for US 30. This is a directional asset. So like for example, it's not like FOREX where price will just keep going back and forth. For this, price has been going down for so long. Eventually, it's going to have to go up. So if you look at price right here, price is pretty much ranging. And then look at this setup right here, this whole setup that I just drew up, right? Price broke above right here. This is a perfect setup. Price broke above, retested, it closed above this line. What am I looking for at this point? I'm looking for price to go up. And then if you use that analysis right there and you let it run, look where price goes, right? So hopefully that makes sense to you guys. Like, you guys should not just be basing everything off the trend meter, the fundamentals as well. I think retail sentiment started to shift though. So let me check this real quick. It shifted a lot. So like here you can see it wasn't at that point, like at that point in time, there was a sentiment. So at this point, you wouldn't even be looking at the technicals. You would be looking at retail sentiment first, because now there's actual direction. I know at 8 o'clock it was at like 53%, but this was at like 9. So like an hour later, sentiment started pushing in one direction. So hopefully this like makes sense, Victor. I think you're still here, right? Yeah. And I wouldn't base your analysis off the trend meter. I would base it off, actual chart analysis here. Because the thing is, the trend meter can be read, but the only way that you'll know if it's actually directional is if you draw, liquidity there, as I did over here. So let me go back real quick. So going back to this point right here, you can look at the trend meter there, and yeah, the trend meter would be red, but I wouldn't have taken it because for the specific reasons that I just drew up here. Like for example, going back, just looking at this from a bigger picture, price has been dropping for like, let's see, 4 to 9 for like 5 hours straight. So like for 5 hours straight, price is dropping. Price is gonna have to shift at some point. And if you just drew the liquidity here, you would see that price is actually not even going direction. It's just going sideways. So for me personally, I wouldn't base it off those two requirements. And let me see. So yeah, Victor said, I suffer with learning the wrong way for so many years, then trying to relearn the correct way. Yeah, no, exactly. And as I mentioned before, guys, there's no right or wrong way to trade, right? Like the way that you learned before, Victor, was maybe that was the right way at some point in time. And maybe like you were taught to like rely on indicators. The thing for me is like, I'm trying to teach you guys because these indicators, you can create these yourself. Like I created all these indicators from scratch just from my own analysis. That's why these are just like, I would use these indicators not necessarily as an end all be all, but more so for confirmation, right? So like, for example, here, if I see price dropping and I get a sell, I'm not going to use a trend meter to determine the entry. I'm using the trend meter to show me that, okay, price is probably going to keep dropping. Like, for example, here, I know that price broke below here, but if price ended up doing the opposite below here, like if it closed down here, then I would be like, okay, I'm going to look for some sells instead of buys. And then again, same situation right here. You can see where price kind of started to push above here. At this point, like you have another confirmation right here. So the same break and retest happened at the session. So price broke and closed above it. This candle right here ended up retesting it. And then if I was to see price break and close past here, so let me see if price pushes above here. There goes that candle right there. And then right there, see how it closes above it? If I was to see an entry here, I would have identified this as an entry. I know there's no entry here, but if there was an entry, I would have identified an entry, and then I would use a trend meter as a confirmation. Not necessarily, okay, the trend meter is green, so I should take buys. Right here, I already identified a buy if there was an entry, and I use a trend meter as a backup, right? Secondary confirmation. So I know it's a little confusing for a lot of people because the way that I used to teach people how to analyze the charts would be directly off the indicators, because they are useful and they do help. However, I'm trying to actually teach you guys how to read the charts now, because like I see a lot of people make mistakes with the indicators because they depend on it so much. But you can do a lot more if you actually understand how to read the chart and then use the indicators as a secondary. Because I don't use the indicators like by itself. I just use the indicators as a secondary. This is to help me identify, if my confluence is better. Like if I'm already looking for a buy here, I'm going to look at multiple things. Like I'm looking if price broke out of this range. That's going to be like one confluence. I'm going to look at the trend meter down here to indicate that, okay, price is probably going to be bullish. I'm also going to turn on the pivots. And then, where are my pivots at? Huh. Oops, I think I deleted them. And then I'm going to turn on the pivots over here. And these pivots are going to give me an even better confirmation, right? So I didn't even have the pivots here, but using these as an extra confluence, like I'm like, okay, price is trend meter is green, price is above the pivots, momentum is bullish. I'm probably going to take a buy here at some point. And from there, I would expect price to push up from this point. So, and there you go. Price would go up, retest the area over here. And then from that point, price can do one of two things. It can either bounce off it or it can break above and continue pushing up higher. So, hopefully that makes sense, Victor. And I agree. Like a lot of people just, I wouldn't say you necessarily learned the wrong way. You didn't learn the full picture. You learn like one part of something, but not necessarily like the bigger picture of analyzing charts. So, other than that, let me see if there's any other question here from Victor to follow up. But if that makes sense, or if you're still confused, Victor, just let me know and I can go over this more in detail. But hopefully that like cleared up a lot of confusion there, because I do see that happen with a lot of people where they're depending on the trend meter and the momentum. And I know people like to depend on it because it's like pretty simple, but you got to see the bigger picture of things. But yeah, no problem, Victor. Glad I could help you with that. Another question from Henry's asking, and is that when your bias changes to a buy? Yes, definitely, Henry. So going back over here that I just drew, this is when my bias will change. Right here. So just as I drew earlier, you can see that price is and was ranging. Let me just turn off some of these things here to clean up the chart. Okay, so as I was mentioning earlier, Henry, so right here, price was ranging, right? So my bias at this point was a sell. So before price broke above here, our bias was a sell, right? Because price kept dropping below here. And then it just kept going lower and lower. So from here, we went from a sell bias, and then price went into a range, and then it confirmed the change of bias right here for a buy. Price is ranging. Broke above right there. This is where my bias would change. One thing that I would do first, though, is I wouldn't change it directly. Like, it's hard for me to really analyze it from this point because it's so late in the session, where I can't look at fundamentals and I can't look at retail sentiment. But just using this for an example, if this was 61% short, the fundamentals weren't necessarily above 100 points, but you did see a shift in bias right here, then yeah, this would be my confirmation that price would be pushing up. So I wouldn't take a trade necessarily right here and there. I mean, if you wanted to take something speculative, then yes, you could have, but I would be looking for another entry over here. So let me see if I can find a buy here. at some point. Like any type of buy entry that would come up over here, like a version 3 or any type of variation, or even a high low or triple confluence. So let's see, nothing there. And then again, I would skip these areas here because this is where the sessions are. Let's see. So I don't see anything here for buy yet. Okay, so actually there's one right here. So not that this is a good trade, but this is where my bias would start to shift because I see a variation right here. This is a V3. So V3 variation right here, we have a low with a red candle. It's followed by a green candle. There's a pending buy signal. I think the stop loss would be too close. Yeah, it'd be too close right there. But just using this as an example, I would have skipped this trade because it's too small. But this would have been my confirmation that things are starting to shift. So like, for example, right here, I don't take the trade, but I do see that it hits. So I'm like, price pushes, and I'm like, okay, this candle, this entry hit for V3. At this point, I'm like, all right, I'm for sure looking for V3s now. So, or looking for buys if they end up coming up. So like, see if I can find one over here. Again, right here, another V3, but it's too close to the session, so I would have skipped it. Price was actually ranging through here for a while. Price push above right there. I'm just looking for another V3 because I can, or not even a V3, just any type of entry that we can use as an example. So at this point, bias would have shifted. And then this is actually a perfect example right here. Another V3, it already confirmed over here. The V3 would have came up right here, but I think the stop loss would still be too close. It would still be too close. This is why I don't trade after 8 because volatility starts to die down a bit. But if you were to take that trade there, you can see that it does hit TP. And it just keeps pushing around. Again, right here, another V3. But the problem with this is stop loss is too close. Again. Right there. So hopefully that makes sense, Henry. But yeah, that would be an area where I would be shifting my bias from a sell bias to a bullish bias. Scrolling up real quick, next question over here is from Solange. Okay, I just saw your question. Solange said, you can skip my question. I think I get it. We can use the high-low indicator to observe bias change along fundamentals, etc. And we don't trade into sessions, so bias shouldn't change mid-trade. Yeah, it shouldn't. So the thing is, if you confirm the entry, Solange, like for example, if you confirm the break and close, like let's see, like one right here. This is another confirmation of a break and close. Let me show you over here. So we have a high over here that was pretty much already there. Let me just go over here real quick. So as you can see right here, we have a high right there. Price ends up breaking, closing past the sessions, right? The sessions can also confirm a bias. So right here, you have price breaking, close past it. The second candle right here, test it. So there's a retest, second step. The third step is that you need price to break and close above here. This is just it's just to confirm that price is actually gonna keep going up, right? It might happen right here, it might not happen right here. It just depends on when it happens. So if you push it forward a little bit, you guys let it push up a little farther. It hasn't broken close above it yet, but we're still waiting for it to break and close past it. So again, right there is where it breaks and closes. And at that point, you now have a bullish bias and you expect price to go up higher. So there you go. The price ends up pushing up higher from there. So yeah, if you've confirmed it, then it shouldn't change mid-trade. Sometimes you'll get a fake out, but that's why you want to confirm it. If you don't confirm it, then yeah, you can get caught in a fake out. But if you do confirm it, then you should have no problem. Let me see if there's one here that can. There's no example here of a bad bias change. Usually it's gonna confirm. If it does confirm, it keeps pushing. Sometimes you get caught in a fake out, but usually those fake outs happen if there's like news or something that's like some sort of catalyst that's pushing price one way or the other. But I don't think there was any news this morning after the live session, so it's I mean, it should be pretty much straightforward. Yeah, no problem, Solange. I know this bias change it's still kind of confusing for some people, but a lot of people are starting to understand it because it's not really that difficult. You're just waiting for price to go into a range, confirm the break and retest, and then write it up. And then if you want to take speculative trade, I see a lot of people take trades. Like when you have that confirmation, people just write it up to the next sessions up here. Not that I recommend anyone take it because this is a little bit of a more advanced way of trading. I do trade this way sometimes, but you have to know what you're doing to be able to take trades like this. So hopefully that helps, Delanji. Other than that, let's move on to the next question over here. Next question is from Valentine. So Valentine's asking, what's the highest time frame I can use V3 on? I mean, I only use it on the 1 minute and 5 minute Valentine, but I've seen people use it on higher time frames. Like I can't give you like a straight answer because I don't use it on higher time frames. But looking at this right here on the this is a 15 minute. Like Anton's not on here, but Anton, when he saw this trade during the live and he mentioned it, he was like, all right, V3 on the V3 on the 15 minute. So he did see a V3 over here. Actually, he saw this one because this is, or I mean, it doesn't matter. There was a V3 right here. So if you want to apply it, not that I recommend it, you have to go and test it yourself because I haven't tested it on any other time frames, but other members in K2 have tested it. So like, for example, right here, it's a bit of a bigger push, but okay. So like right here, here's a V3 on the 15 minute. V3 entry, we have a low right here with the red candle. Following candle is a green candle. We have a following pending momentum here for a buy. You wouldn't use the max stop loss limit because on the higher time frames, you're going for a bigger push, but same thing 1-to-1. If you let this run, there you go, full TP. So there's an example of it working right there. I mean, you can literally use this on whatever time frame you want, but you would have to test it. So don't take my word for it. You'd have to go and test it yourself. So again, right here on the 30 minute, same thing, right? Same thing right here on the 30 minute. V3. You have a low, pending buy signal, 450 pip, TP stop loss. You let it run, full TP on the next candle. So, I mean, it's up to you how you want to apply it. I mean, there's no one way to apply it, but I mean, if you want to play around with it, here's a 1 hour. I mean, again, here's the same thing. It's like the same trade, just on different time frames. And this is why you can apply it on different time frames because it's literally the same trade. It's just on a higher time frame. So again, right here on the 1 hour, again, right there, this is a way bigger move because obviously it's on the 1 hour time frame. You moved stop loss right here to the previous swing. It's about, I mean, I guess you can round it up to like 120 or 1,200 pips. And you let that run and full TP again right there. So, I mean, it works on like, from what I can tell, it works on like everything, but I can't give you my word for it because I haven't tested it myself. So, I mean, you can play around with it and figure it out. It works pretty nice. So other than that, let me see if there's anything else here. Let's see. Victor said, I could really get with the V3. It seems like everything I enter, every time I enter one, it goes against me due to heavy trend. Yeah. So for me personally, that's why I use the other, and I agree with you, Victor. And that's why, like, for me, I have a confluence. So like the requirement here is that you're trading in the direction of confluence, right? So I was just showing like examples here. I think the one thing that you might not be using with it would be the fifth requirement, right? Confirm trading the direction of bias. Because if you're trading the direction of bias, then you shouldn't be having that issue because so you mentioned here that it goes against you due to the heavy trend. If you're trading the direction of bias, like with retail sentiment, fundamentals, and technicals, you would be trading with the trend. So that's why you would probably not run into that issue. If you have a trade where you ran into one and you lost and it was within the direction of the trend, then we can look at it. But for the most part, I think if you're trading with this confirmation here, retail sentiment, fundamentals, technicals, I think usually it should be going in your direction because you're trading with the direction of the heavy trend. So you're basically just riding the wave if the wave continues pushing in that direction. So yeah, I mean, if you have anything specific that you want to pull up, like a timestamp, I can pull it up, but it's going to be hard for me to review it right now because it's so far into the next session, right? Like we would have to see what the fundamentals look like at that time. The sentiment, stuff like that. Because we can't rewind that, unfortunately. That'd be cool if we could rewind it, but unfortunately we can't. So other than that, let me scroll up real quick. Let's see, Talanji said it works on a 10-minute and 30-minute, but there's only 2 hours from open until mid-market before the reversal, so it's riskier. Yeah, and I agree with Talanji. That's why I stick with the shorter time frames, because the higher time frames you get caught in a lot of reversals. So that's why I don't really want to mess with it on anything higher than the 1 minute or 5 minute. So let me scroll up real quick, see what else is here. Next question is from question. Josh is asking, can you give an example of requirement 5 in validating the highest? Yeah, sure, definitely. See that. So let me put the requirements over here. Let's go. Okay. So let me see if I could find one right here that. Okay, so this might be an example right here. Let's see if I can find it. All right, so I'm gonna use this as an example right here. Oh, this is a perfect example right here. Okay, so the first requirement, you want to confirm the previous swing, or 5 candles have passed. So let's wait, move 5 candles. 1, 2, 3, 4, one more. No, I wouldn't fit. This one missed it by like 1, but you can see right here, Josh, that this is kind of what I'm referring to. Like if it touches it right there, like we have 1 candle, you're establishing it, but you can see there's 3 candles here that have touched it. So if they've touched it already, then it invalidates the 5th requirement. Let me see if I can find a better example for you. Maybe one. Okay, right here's actually a good one too. Okay, so the requirements right here for the high low. All right, again, right here, we have, let me just move it forward. Okay, so this is perfect. Or actually, this wouldn't fit the requirements again, sorry, because we need the momentum in that direction to confirm it. Let's see if there's another one over here. Actually, let me see if I can. Okay, this is a perfect example right here. All right, so here goes the example that you're looking for. Okay, so first requirement, you want to confirm the previous swing high, making sure that 5 candles have passed after the high has been established. So like right here, here's the first candle, the high, 1, 2, 3, 4, 5. That's requirement number 1. Requirement number 2, you want to confirm price is breaking and closing past it. So this candle right here is broken closed past that high. That's requirement number 2. Requirement number 3, you want to confirm you're trading the direction momentum. This candle right here is a bullish buy signal. So with that said, we're only looking for buys. Requirements 1 through 3 met. The last requirement is that you want to confirm that price is not ranging or consolidating. You can see that prior to breaking and closing past this point, price was consolidating right down here. And for the 5th requirement, you want to confirm, this is the one that you're asking about, confirm price has not touched the previous swing before breaking close. You can see right here that price broke and closed right here, but 2 previous candles right here touched the high. So at that point, this would have invalidated the 5th requirement. If you have anything else here, if there's any other confusion here, Josh, let me know, because it's pretty straightforward. But if you want me to show you another example, I could show you another one. Okay, perfect. So you got it. Yeah, I know it's a little confusing if you don't see it like actually applied, but you can see right here that it's pretty clear when you actually see it. You just want to make sure that this high has not been, or low has not been touched before the entry has come up. So glad I could help you with that right there. Let's see. Next question over here is from, let's scroll up real quick. Valentine's asking, is there a way to see fundamentals with all companies like DAX, like we do for US 30? Yeah, you can do the same thing on CNBC, Valentine. So if you go over here to CNBC, it's going to be closed right now because it's the market's closed for the DAX. But if you click over here to EU, the DAX is right there. So you go to cnbc.com, same thing that we do normally. Normally when you're in the US, you look at the DAX right here, or you look at US 30. If you want to look at European assets, just click on EU, click on the DAX, and you have the same thing right there for the DAX. So I don't know if that's something, I feel like a lot of people don't realize that like CNBC covers like all countries. If you want to trade Asia, they have the Asia indexes right there, EU, bonds, oil, gold, Forex, crypto. I mean, there's a lot of different ones here that you can use. So yeah, Valentine, if you want to pull it up, just go to cnbc.com, click on EU, you'll have the DAX right there. If you want to trade the UK 100, it's right here as well. And then these other ones that I don't know of. So yeah, there goes that question. Next question is from Milzon. Milzon's asked, when people ask what you do for a living, what do you respond? I mean, it's kind of tricky. Like whenever people ask me, I usually just tell people I'm technically an attorney, but I don't practice law anymore. I mean, realistically, I'm a business owner, right? So that's what I tell people. Like I own like K2 is technically considered a tech company. It falls under technology because I develop these indicators, right? So I develop these indicators here, which has it fall under a tech company, but I mean, there's no straight answer to it, right? I'm still technically an attorney for the company as well. Like if someone was to sue K2, I'd be the attorney. Or if I wanted to sue somebody, you know, I'd be an attorney. I have different titles, right? I'm CEO, attorney, trader, and there's a lot of different things that I can use, but there's never really any straight answer for my side. Yeah, teacher as well, like from Talanji, like educator, right? There's no like one thing that I use when people ask me. I kind of have to explain it in like different ways, but attorney is always my go-to because that's technically what I am. You know, I'm still licensed to practice law because I'm still technically the attorney for the company. And especially if we have like copyright issues, like for example, I've copyrighted all of K2. So if someone tries to copy K2 or use the K2 logo or something, I would sue them and get money out of them for using, you know, any of the K2 logos, names, and that stuff. So yeah, I mean, overall, I guess I don't know. I don't know what I'd use for that. Milzon said, I'm hesitant to say trading because people think that trading is a get rich quick path. Yeah, I mean, I wouldn't tell anybody you're a trader, right? It's just if you tell someone you're a trader, it opens so many doors to so many people bugging you. Right? That's why I never tell people I'm a trader. If you tell someone you're a trader, everyone's gonna be like, oh yeah, can you teach me? Like, all right, here's a K2 website. And then like 99 out of 100 times, they're not gonna go on the website. They're just gonna be like, okay, but I want you to teach me. I'm like, all right, well, you're not gonna, I'm not gonna teach you if you don't put in any work. So yeah, for the most part, I wouldn't tell people you're a trader. I would just tell people that, I mean, you're a business owner, I guess. Trader is like usually not a good, it's not a good, a good occupation to tell people because people always get the wrong picture. They think that you don't, that, I don't know. I feel like a lot of people will like they think of a lot of different things. Like they'll think of like Wolf of Wall Street. Wolf of Wall Street wasn't even a trader. He was a broker. So, I mean, there's a lot of different, I guess, connotations that come from you telling someone that you're a trader. So I probably wouldn't tell them that. Yeah, no problem, Melzon. I mean, you could tell yourself whatever you want. You could just say you're self-employed, but then they'll ask you, okay, so what do you do then, right? The questions they never stop. But yeah, other than that, let me see if there's any other questions. I don't think there's anything else here on the list. Solange said, my dumbass put financial consultant on my company registration. I'll have to wait till next January before I can change it. Yeah. And I think you're in the UK, right, Solange? So I don't know how it works for you out there. I don't know if it's the same. Yeah, you're in the UK. So I don't know if it's the same for you out there, but yeah, here in the US, they're pretty strict about that. If you put you're a financial consultant, you have to have like some sort of licensing to be a financial consultant, which I mean, it's not that difficult to get here. It's just a hassle. But you definitely don't want to put that because you're technically not a financial consultant. You're more of a specialist, right? Like a business consultant, but a specialist in your field. So yeah, business consultant, it sounds better. You're not necessarily lying because that's really what you're doing. You're not because if you put that you're a financial analyst, you're like or a financial consultant, you're actually like breaking down numbers, right? You're not necessarily a trader, but you're breaking down the financials for a company, like whether a company's profitable or not. Kind of similar to an accountant. So uh yeah, I mean, other than that, I don't I don't see anything else on here. Yeah, you'll get turned out by banks because they don't want to. It's a conflict of interest for banks and whatnot. But let's see. Other than that, guys, I think that's it for the questions. If you guys have any other questions, don't feel afraid or shy or whatever. Just put your questions in the chat. I can answer them. We've been on this live session for a little over an hour. So so other than that, I can answer whatever questions you guys have. But if there's no other questions, I think that might be it for this session. And just a reminder, if you guys didn't get your questions answered this week, there's no problem because I have these sessions every week. Victor said he thinks he will try the 10-minute daily. Yeah, you can do that, but I would recommend using a smaller lot size because you got to keep in mind that the 10-minute daily is a bigger move. So you're going for 1,500 pips. It's going to cut into a lot of your leverage. So if you do want to trade on the 10-minute daily, then you definitely want to lower your lot size. Make sure you're not using the full lot size that you normally use, Victor, because you don't want to go too far into your risk. Make sure that you're risking like maybe 1% for the daily, and then you can still trade the other strategies if you like, maybe like 1 or 2%. Because what I've seen some people do is they trade the same lot size on the bigger moves, and yeah, you'll make bigger profits, but then you also lose a lot of profit too if it ends up being a bad trade. Solange's asking, I want to ask about paying yourself. Does the payment amount have to be the same every month for the year? I mean, it just depends on like what you use for your bookkeeping, Solange. Like for me, I pay myself a monthly paycheck. My total annual salary as I guess CEO of K2, I pay myself like over 100K. So every month it gets split up. So like, for example, if I'm paying myself like 120, divided by 12, this is how much I'm paying myself a month. So, but you could pay yourself like at the end of the year. It could be a lump sum. You don't have to pay yourself. You could pay yourself weekly, bi-weekly, monthly. It doesn't have to be the same. The end number is what really matters. So there's no specific number. It just depends on what you want to pay yourself. Because the thing is, like when you're running a business, like for me, I'm consistent already, right? So I know how much I plan on making from trading every year. So I can pay myself X amount of money. I can pay myself a bonus at the end of the year. That's what you can do. You can pay yourself a little bit, like up until the end, and then at the end, if you do really well with trading, you can pay yourself a bonus. But I mean, there's no specific number. It just depends on how much you plan on paying yourself. So yeah, and you probably want to meet with an actual accountant. So like just a reminder, guys, this isn't tax advice. I'm not a tax accountant. I'm an attorney, but I'm not a tax accountant, or I don't have any tax background. I'm just telling you guys, from my opinion, what I pay myself. You have to pay yourself a reasonable salary, and for me, that's reasonable for me now. So yeah, I mean, other than that, guys, I think that's it for the questions. If you guys have any other questions, feel free to put them in the chat. And if you guys are too shy and scared, just send me an email or message me on Telegram. And then, so here's the thing, guys. I see a lot of people that message me like after. So if you guys do have questions, but you're scared to ask on the live, just send me the question. I'll add it to the list. So like for the next mentoring session, I can answer your question in the very beginning so that you don't have to watch the entire mentoring session. And I can just answer your questions. I do get it. Some people are just scared to ask questions, or they think they're asking something dumb, and they don't want people to think that they're dumb. But there's no dumb questions, right? Everyone's confused and everybody's lost at some point. And I'm here to help you guys out so that you guys understand what you guys are doing right, what you guys are doing wrong. So, I mean, other than that, if you guys have any other questions, feel free to reach out. Otherwise, let me check my schedule for next week. For next week, let's see. We'll probably have our mentoring session on Monday or Tuesday or Thursday. Okay, so Monday, Tuesday, or Thursday, we'd have a mentoring session. If there's a specific day that you guys want to have it, just let me know so that I can put out a poll to make sure everyone can make it. Otherwise, I think earlier in the week is better so that everyone can get their questions out of the way before the trading week starts completely. So for next week, we might have it again on Monday. If you guys want it on a different day, just let me know, and then I'll try to set it up so that we can make that happen. So other than that, guys, hopefully I answered all of your questions. If you guys have any other questions, feel free to reach out. Otherwise, we'll be back here tomorrow morning for the next live session, and we'll keep pushing through this week. So other than that, guys, have a great rest of your day. If you guys don't need to trade, just sit out the market. I'm not trading at all, so I'm not trading during Asia at all. I'm just chilling until tomorrow. I'm in profit decent for today, not like I'm in profit like 1,000 because my copier didn't work today, but I'm not looking to lose that to take risky trades during Asia. So other than that, guys, I will see you guys tomorrow for the next live session. And if you guys have any questions, feel free to reach out. Otherwise, we'll be back for the mentoring session again next week on Monday, April 4th. So until then, guys, have a great rest of your day, and I will